Welcome back to the CFO Edge, the podcast that helps founders and business owners make smarter financial decisions. I'm Carol, your host and fractional CFO, and today we are talking about how to build a financial story that investors not only understand but believe. One that positions you as credible, strategic, and worth betting on. Here is the truth. Investors buy into a narrative backed by numbers they trust. So let's get into it. Your financial narrative is not just your pitch deck's financial slide. It's the story your numbers tell, from your revenue growth, margins, and burn rate to your customer acquisition costs and forecasts. It's answering the question, do these numbers align with founders' vision and the reality of the market? Investors are constantly checking if your numbers and your story match. If they don't, trust is gone. Here are 3 common mistakes. First one is over-optimistic hockey stick graphs. Forecasts that show explosive growth without a credible plan erode trust fast. The second one is ignoring the why behind the numbers. If you say you'll double revenue, you need to explain the specific drivers. Is it new markets, better retention, or your higher prices? And the last is inconsistency between financials and operation. If your cost structure says one thing, but your hiring plan says another, investors notice. So, what are the 4 pillars of a believable financial narrative? The first one is clarity. Your numbers should be simple to follow. If an investor needs a finance degree to understand them, they'll move on. Consistency. Every slide, every metric, and every forecast must align. No surprises in the data room. Then it's about evidence. Show proof that your assumptions are grounded in past performance if you are not raising the first round or your seed round. Show them that your assumptions are grounded in past performance, market data, or early wins. Depends on if you are raising your seed round or the next series. And the last one is your credibility. It's better to be slightly conservative and beat your estimate later than being overly aggressive and miss it. If you have invested in the stock market, you have seen when the companies have promised higher earnings per share or higher revenue, and when they report and they haven't beat those estimates, the markets get pretty upset. So then maybe we can take some of those learnings and apply it into our startup and business finance as well, right? So how do you build it? Start with your story first. What's the big picture? Why now? And what's your growth story? Then map the numbers to the story. Every chart or KPI should directly support your vision. Then stress test your assumptions. Ask, what would an investor push back on? How can I answer before they even ask? And practice with tough audiences. Share with mentors or other founders who will poke holes in it. And if you don't have that ecosystem around you, you will still have yourself, so you can be your own critic. And remember this, a believable financial narrative isn't about lowering your ambition. It's about making your ambition investable. If you can make an investor think like this, this founder knows their numbers. understands their markets, and has a plan I can believe in. So if that's the thought you put in their head, you have already won half the battle. As always, thanks for tuning into the CFO Edge. If you are finding value in these episodes, I love it if you share it with another business owner and founder who is thinking about their next move. This is the CFO Edge, and I'm Carol, your fractional CFO, and can't wait to talk to you next week.